Hello, welcome to your federal employee benefits, where we cover topics aimed at helping federal employees make smart financial decisions. Today, we're covering everyone's favorite topic, taxes, specifically how your retirement income will be taxed in retirement. Now, when I say retirement income, I'm of course talking about your three sources of retirement income as a federal employee. So that's your first pension, your TSP, and Social Security. Okay, so we're going to cover how each is taxed in retirement. Now, if you're new here, I'm Jose Armenta. Welcome, and hit that subscribe button so you don't miss any future videos. Okay, without further ado, let's dive in. Okay, so when it comes to your first pension, what many federal employees don't realize is that the vast majority of your first pension is taxable income. Okay, 95 to 99% of your pension will be taxable. Okay, and the reason why it's not 100% is because you did contribute over your career a small portion to the first pension. And you can actually see the amount that you contributed on your earnings and leave statement. If you look there and you look at the deductions, one of those will be for your pension. Now, at the federal level, okay, so most of your pension will be taxable at the federal level. That's across the board. Now, some a lucky few may live in a state where the state does not tax their pension, okay? But right now, I'm speaking about the federal level. So at the federal level, everyone's going to pay taxes on their pension. The vast majority of the pension will be taxable. Now, let's talk about the TSP. So the TSP is a qualified retirement account, right? Just like the 401k, which means that it receives special tax treatment. Now, the tax treatment that your TSP will receive depends on whether you have the traditional or the Roth TSP. Now, let's start with the traditional. The traditional TSP is tax deferred. Okay, it's a tax deferred account, meaning that you defer taxation. Okay, I like to call this the tax me later account because you don't pay taxes up front. You pay taxes on the back end in retirement when you take money out. Okay. Now, you don't only pay taxes on the amount of money that you put in and did not pay taxes on. You pay you pay taxes on your contributions, the money you put in, and the growth of those contributions over the years. Okay. So if you put in, 100,000 or 200,000 over your career and it grows to hopefully 600, 700, $800,000, you're going to pay taxes on every penny that comes out of that account. Now the Roth TSP. The Roth TSP, okay, I said the traditional was the tax me later. The Roth is the tax me now account. Okay, you can probably guess why. It's because you pay taxes now when you put money in the Roth TSP. Okay, it's called an after-tax account. And so you don't get any tax benefit up front when you contribute to your Roth account. You receive tax benefit in retirement. Okay, so when you made contributions, when you put money into your your Roth TSP, you did so on an after-tax basis, meaning you pay taxes on the money and then you put it in the Roth TSP. It grew tax-free, and as long as you meet certain rules, which most people will in retirement, when you take it out in retirement, it's tax-free income. Okay, you won't pay any taxes on it. Last but certainly not least, your Social Security benefits, okay, are going to be extremely important in retirement. Okay, they will make up for most federal employees, they're going to make up a significant portion of your retirement income. And a lot of federal employees are surprised to hear that their Social Security benefits will be taxable, and it will be taxable at the ordinary income tax level, okay, or ordinary income tax rate, excuse me. Now, do you see the trend here? Okay, Uncle Sam likes to take his piece of the pie. Okay, now when determining what percentage of your Social Security benefits will be taxable, you have to look at what's called your combined income. Okay, there are three brackets of combined income levels. Okay, and when you pass these brackets, a larger percentage of your Social Security benefits are taxable. Now, I'm not going to cover the first two brackets because they're very low, and most federal employees will hopefully surpass that amount. Okay, this is based off of your retirement income. So while you don't want your Social Security benefits to be taxable, no one wants to pay more taxes than is absolutely necessary. Um, the only way you're not going to pay taxes if your combined income is extremely low, which means you're living with very little income in retirement. Which for most of you, I hope that's not the case. I hope in retirement you have plenty of income to have the retirement that you envision. But the last bracket, there's three brackets or three thresholds, if you will, to determine how much of your Social Security benefits is taxable. Most federal employees are going to fall on the third bracket, which is for single filers. So if your tax filing status is single and you make over $34,000 in combined income for the year in retirement, then 85% of your Social Security benefits will be taxable at your ordinary income tax level. Now, if your tax filing status is married filing jointly and your combined income for the year in retirement is 44,000 or more, then again, 85% of your Social Security benefits will be taxable. All right. Now, how do you determine your combined income? Well, you'll take 50% of your Social Security benefits, add that to your AGI. You can get that on your tax return, and add any tax exempt interest, and that'll give you your combined income level for the year. Understanding how taxes will impact your federal employee benefits in retirement is critical to the longevity of your financial plan. And by taking the time to plan early, you will increase the probability that you'll have the retirement you envision and will have more opportunities to minimize taxes. If you found this video helpful, share, like, and subscribe so you don't miss any videos in the future. And if you want to do a deeper dive, I'll put a link to my article at yourfederalemployeebenefits.com where you can do a deeper dive there. Until next time, I'm Jose Armenta. Take care.